Is now a good time to buy? That's the million-dollar question these days, and I get asked this all the time. I'll give you my thoughts. I'm Jessica Genung here with the Genung team, and thank you as always for stopping by my channel. If you are thinking about moving to the Murrieta or Temecula Valley, we would absolutely love to hear from you. Even if you are a year out from making your move, please feel free to reach out to us and schedule a Zoom or a phone call to make a plan and get any of your questions answered. Let's get into our topic. This is actually a quite complicated decision currently, so we are going to dive deep so you can get the full picture. Folks are always asking me if they should buy now or if it will be better for buyers later this year or perhaps next year. A lot of folks, they want to buy now. They are just worried that they're going to overpay by buying if the housing market takes a dip in the future. I'll give you my thoughts about the next year or so, but the truth of the matter is that beyond the short term, no one knows what will happen. A lot can change over time. I don't have a crystal ball, and this is just my opinion. That's my quick disclaimer. Be skeptical of people who think that something is going to happen for certain because nobody knows for sure. Let's talk about supply and demand. It's common knowledge that prices are a function of supply and demand. The supply of housing is the issue for buyers, and it is the main driver of the recent price increases. The supply, otherwise known as inventory, is far too low to meet the demand. As of the making of this video, there are 145, 172, and 132 active single-family home listings in Murrieta, Menifee, and Temecula. This is half of what it should be, actually 1/3. Today happens to be a Wednesday, and most agents are like me and Chris, where we like to go live with new listings on a Wednesday or a Thursday before the weekend. We will see where the monthly stats land after next week, but low inventory continues to be the dominant factor in the market as usual. The biggest reason supply is so low is because of the low interest rates that homeowners currently enjoy and have locked in. Almost 92% of homeowners with a mortgage have a rate below 6%. More than 82% have a rate below 5%, and 62% have a rate below 4%. Close to a quarter of mortgage holders have a rate below 3%. I remember over the past few years, many of my VA buyers in particular were locking a 2.75% interest rate regularly. The government-backed loans such as VA and FHA, they tend to have the lowest interest rates, although the fees for those loans can be higher than conventional loans. One of my clients recently called me that had the VA 2.75% interest rate thinking about selling. This client that called me recently, they had purchased, and I believe it was 2020, so they bought a new construction home, and they had the 2.75% interest rate, as I mentioned, and were thinking about cashing out on their equity because they did have a lot of equity in their home. So I asked, okay, where are you planning on moving to? And they were going to rent. To give up that low of an interest rate, normally sellers have a really good reason for selling, like job transfer, or they're just absolutely bursting at the seams of their house, or just normally they're more motivated than just trying to time the market, because rent is always going to be going up. Who knows where the peak of the market is, and if this client goes to buy later down the road, they could potentially get priced out. So I advise that client, I probably would keep that house with the 2.75% interest rate, and this is why a lot of sellers are not selling currently. This is the first time in my career that high interest rates are not necessarily discouraging buyers from buying. Rates are discouraging sellers from selling. In this article, the Compass CEO compared the previous low interest rates to handcuffs on inventory. The current average rate, according to the Mortgage Bankers Association, is 6.77%. When will we see more sellers list their homes? When rates come back down, I think that we'll start to see more sellers easing into the market. Lots of sellers want to upsize or downsize or move to a different area altogether, but they do not want to pay double the mortgage rates to do so. But if rates get back down into the 5s or lower, I think we will see more sellers enter the market. Do I think home prices are going to be coming down in the near future? If we find ourselves in this very, very long-awaited recession, will housing prices decrease? Interest rates normally come down in a recession. Check out this chart. And aside from the 2008 housing crash, home prices have otherwise risen during a recession. That might be surprising to hear. Check out this chart, which shows the 2008 recession as the only recession since 1960 where home prices declined. So recession does not necessarily mean that real estate is going to go on sale. Prices did start to shift and come down in our valley starting last spring and in early summer of 2022. It was a pretty slow decline, more of a correction and not a crash like some people were waiting for. In our valley and in most major markets, prices have been back on the rise since the beginning of the year and are nearing all-time highs. Here is a scary chart for buyers. The orange line is this year and these are national numbers. That orange line is on a straight upward trajectory. Will the line take a downturn like in 2022 or will it continue on like 2020 and 2021? My opinion of the reason that prices came down in 2022 is because folks were a little shocked by how rapidly rates were increasing and thought the higher interest rates were going to crash the market. This caused inventory to build a bit and motivated sellers to price competitively and negotiate more with buyers. But clearly the market didn't crash and prices are back on the rise. According to the same Redfin chart, prices are only 1% off the all-time highs. As it turns out, the second half of last year's correction now looks like it was a brief opportunity to buy. We were getting our clients' offers accepted at asking price, and we were having luck negotiating prices below asking as well, especially with our new construction clients. The builders were all of a sudden very agreeable to considering lower offers and throwing in other incentives as well. If you want to learn about what kind of incentives the builders offer, about once a quarter, I have a free webinar called 7 Ways to Save Money When Buying a New Construction Home. If you'd like to get on an interest list to be notified the next time I do this webinar, there is a link for it down below in the description. Speaking of new construction, let's take a look at this Redfin article. Even though there wasn't much of a spring home buying season this year, there was a spring building season, Mar continued. That means there's hope for more listings somewhat soon, with home builders working to fill the inventory bucket. Builders broke ground on more single-family homes in May than almost any month in nearly 2 decades, which could expand buyers' options by the end of this year. I think that this might help. It certainly can't hurt, but I don't think it's going to have a major impact in my opinion. Okay, continuing on with this Redfin article, we are going to be going over leading indicators of home buying activity. And this is for the 4 weeks ending June 18th. So leading indicators, this can help us predict what's going to happen in the market. The daily average 30-year fixed mortgage rate was 6.9% on June 21st, down from a half-a-year high of 7.14% a month earlier. For the week ending June 15th, the average 30-year fixed mortgage rate was 6.69, down slightly from 6.71 the week before, but still close to the highest rate since November. So rates, unfortunately, they have not come down, even though the Fed did their pause. I kind of thought that that might help decrease the interest rates, but it did not. They're staying strong. Mortgage purchase applications during the week ending June 16th rose 2% from a week earlier, seasonally adjusted, marking the second straight week of increases. Purchase applications were down 32% from a year earlier. So a couple weeks in a row, we have mortgage purchase applications increasing. That is showing that the market is still chugging along just fine and increasing slightly. The seasonally adjusted Redfin Homebuyer Demand Index, a measure of requests for home tours and other home buying services from Redfin agents, was down slightly from a week earlier during the week ending June 18th. It was up 11% from a year earlier, the 4th consecutive annual increase. Demand was dropping at this time in 2022 as mortgage rates rose. So this request for home tours, according to the Redfin Homebuyer Demand Index, shows that we're up 11% from last year. So again, indicating that the market is still strong. Google searches for homes for sale were up 13% from a month earlier during the week ending June 17th and down about 11% from a year earlier. So month over month, searches for people looking for homes on Google is increasing, although not near as much as last year. Touring activity as of June 18th was up 14% from the start of the year, compared with a 4% decrease at the same time last year, according to home tour technology company ShowingTime. Tours increased slowly during this time last year as mortgage rates shot up. ShowingTime, that's the app that we book clients to see properties on. And so showings are up 14% from the start of this year. So more home buyers are looking at homes. To me, that says that more home buyers are going to be buying homes. So taking all of these leading indicators into account as a whole, it appears to me that home buyer demand remains strong and continues to be on the rise for the time being. Would I recommend buying right now? I always recommend not trying to time the market, and this is from my personal experience of having bad market timing. Now that I'm older and wiser, I realize the market is near impossible to time. I also realize that being scared to enter a market and holding off can cost you dearly down the road. This happened to many folks that thought the market had peaked in like 2018 and 2019, also right when COVID hit. People, they were fearful and they held off from buying, and they missed out on big investment and equity gains. I always recommend to weigh heavily on your personal financial situation, meaning, do you have stable income and secure employment? How long do you plan to live in the home? I recommend a long-term mindset of 5 to 10 years when buying any real estate in case you have to write out a correction. You definitely want to avoid having to sell in a down market, of course. Maybe you have a home to sell and you will be buying in a similar price range or less. I'm comfortable with this scenario because it can mostly be a wash. You can get the benefit of the seller's market on the selling side, and that's basically going to wash with the negatives of when you buy on the buying side. I really feel for my buyer clients, and especially my first-time home buyer clients that aren't coming in with a big down payment like a lot of my clients that had a house to sell and that are able to roll over their equity, which helps keep your mortgage balance down and your payments can be much more affordable. When I bought my first home in Murrieta back in 2010, it was a total no-brainer. Prices, they were so affordable, and my payment on the home with an FHA loan was less than the cost of renting. The main challenge then was that it was super hard to get a loan, and I remember being put through the ringer trying to get qualified. The lenders basically wanted everything in the kitchen sink. It was right after the real estate market crashed during the Great Recession. Now is a different story, and it is not so much of a no-brainer, and if you're not putting very much money down, your mortgage payment will very likely be higher than your rent payment would be. This is not a video about if it's better to rent or buy. I'm going to save that one for another day. My conclusion is now is certainly not an easy time to buy, but I don't foresee it getting any easier in the near future. I wish I had better news for buyers, but I will always shoot you straight. If anything changes and the market starts to shift like it did in the spring and early summer of last year, I will certainly be telling you about it as I did in other videos. What say you? We love to hear from you and read your comments down below, and I do my very best to respond to each and every comment right away. Let us know where you think this market is headed. Thanks so much for watching. Bye.